Francis. You've just written the second annual edition of your Hong Kong versus Singapore deep dive report, where you compare both cities' prospects as both a financial and a business hub. Now, this year, you discuss how Hong Kong has surprisingly benefited from sharper US-China tensions and how this has cemented Hong Kong's role as Asia's financial capital. Can you explain?
We believe Donald Trump's foreign policies, tariff policies, have been alienating some of his allies and many of the countries in the world. In fact, on a relative basis, Hong Kong and China may have become a bit more attractive and drawing more funds to the city. I think we can see the Hong Kong initial public offering market as an evidence. So far this year, we are talking about an IPO volume of about 14 billion US dollars, which is the most in the world up till this stage of the year. And this is also higher than the full year figure, about 11 billion US dollars in 2024. And Bloomberg Intelligence is expecting the overall IPO volume in Hong Kong to beat 22 billion US dollars for the full year 2025. Other than that, we still have a very robust wealth business flows, thanks to the no interest rate in mainland China, the onshore markets. And many of the funds are still flowing into the city to seek for investment opportunities and high returns. And in terms of bond issuance in 2024, Hong Kong is still better off than many financial hubs in the region. And Hong Kong is only behind Singapore in two areas. One of it is about the forex market. Hong Kong is a tiny bit behind Singapore as Asia's second forex trading hub. And crypto would be another area which Singapore has more established regulations a bit ahead of Hong Kong.
And what about Singapore? How has geopolitical tensions and rising global tariffs impacted the city?
Yeah, again, it's about Trump's tariffs, Trump's policies, and Trump's policies to draw more investments back to the United States may affect the appetite of multinational firms to invest in foreign business hubs like Singapore versus in the United States. That's the first point I want to make. The second point would be about the very basic tariffs Singapore is facing, about 10% to the United States, although it's still a very low level. But there have been about 14% of Singapore's exports with destination to the United States in 2024. And in the same year, manufacturing is accounting for about 21% of the GDP. As a result, we are seeing consensus forecasts to have been adjusted down for the city-state to about 2% over the past 2-3 months because of the tariff impact. And lastly, it is about the gains from Hong Kong from 2020 to 2024, which may fade a tiny bit. Over the past few years, especially during the COVID pandemic, Singapore has been gaining the business and financial flows from Hong Kong because of Hong Kong's political upheaval and the COVID restrictions. After the reopening of Hong Kong since 2023, this trend may have died down a tiny bit.
So if Hong Kong is arguably Asia's financial capital, is Singapore still the region's business hub? And in particular, are global companies still using Singapore as their regional headquarters?
Obviously, Singapore is still the top business hub in Asia, especially for foreign companies, multinational firms. According to its own statistical data, there have been about 34,000 foreign affiliate companies with offices in the city, as a projection from the data from 2016 to 2023. Hong Kong, in this aspect, is still quite behind, with a tiny bit less than 10,000 last year. Although there has been a tiny pickup, for the number of foreign companies in Hong Kong. But for Singapore, we do see some trend of peaking out because the business expenditure commitment from foreign companies have declined a tiny bit to 5.1 billion US dollars last year after very robust gains from 2020 to 2023. In Hong Kong, however, according to Invest Hong Kong, we do have a bit more FDI brought in by foreign entities, but 10% higher in 2024.
And real estate is a big component of both cities' economies. What's the outlook for the property market in both Hong Kong and Singapore?
Hong Kong has been experiencing a few years of a property downturn. If we go to commercial property first, Hong Kong's office rents still have a chance to go down by another 8% this year, with prime office vacancy edging higher, likely to 18% sometime this year. Relatively, Singapore's office rents has been staying in the high level without much changes. That's what we're expecting. But on a relative basis, because of Hong Kong's rental downturn, Hong Kong may become more and more attractive to international business. So that's the first point I want to make. The second point about the housing market. Again, Hong Kong's home prices have been edging down for about 30% since its peak in 2021. And Singapore has been gaining during the same period. For the Hong Kong property market, we are seeing some green shoots because of a few reasons. First of all, we see really low HIBOR. Now it's about 1% versus the equivalent US rates of about 4%. This is definitely a positive factor driving the potential stabilization of Hong Kong's housing market. Also, we do see a bit of slowing supply in the housing premises, housing units, and that could also help curb the downturn of the Hong Kong home prices. Relatively, Singapore's home prices have been staying at a really high level. We are still expecting the housing prices in the city-state to edge up by low single digits percentage point this year.
And lastly, a question that a lot of listeners may be interested in: which city pays more in terms of salaries and total compensation?
For the time being, if we try to single out the financial industry, Hong Kong still pays a lot more than Singapore. I take a few examples. For instance, for the professionals, the bankers working on the corporate finance and capital markets area, their salary, director or managing director grade salary could still be like close to a double of what the Singapore counterparts are making. And for private bankers or wealth managers, Hong Kong's RM could still make up to 26% more than the Singaporean peers. So the China factor does count quite a bit if we look at the IPO volume, if we look at the wealth flows from the mainland to Hong Kong over the past few years.
Francis, thank you for your insights.